Whether you're a diehard sports fan, a hopeless romantic, or a comedy aficionado, the Xfinity 10G network was made for streaming it all. Worry less about buffering when streaming your favorite shows, movies, or live sports, and enjoy a better way to watch. Xfinity gives you a reliable connection for streaming, plus all the entertainment you love all in one place. Fear not, because now you can finally sit back, relax, and stream your favorite entertainment and sports like never before with the Xfinity 10G network.
It's time to say goodbye to hold music and say hello to fast customer support with Service Cloud. With trusted AI and data working together, you can skip long wait times and deliver efficient, personalized service right away, all while keeping support costs low and more customers happy. Reimagine your customer support with the #1 AI CRM for service. Learn what's possible at salesforce.com/products/service.
This episode is brought to you by Carnegie Mellon's Tepper School of Business. Want to advance your career or switch fields? An MBA from Carnegie Mellon's Tepper School of Business can help. Earn your degree from a top-ranked business school with a thought-provoking curriculum, one-on-one leadership coaching, support from experienced career counselors, and full-time, online hybrid, and accelerated MBA formats. Join the intelligent future. Visit cmu.edu/Tepper to learn more.
My name is Jeremy Quintanilla. You are listening to Age of Jeremy. I'm an entrepreneur, and I'm the co-founder of Age of Radio and 3T Fitness, and, well, other businesses that I am working on. This podcast is about everything that I learn and the trials and tribulations it took to learn them. I hope you enjoy. Thank you so much for tuning into the Age of Jeremy. This episode was recorded on Tuesday, February 2nd, 2021 at 5:07 p.m. So some of the stuff that you may hear might be outdated by the time you hear it. That's, I guess, one of the negative things about listening to a podcast. But the good thing about listening to a podcast is you can just keep coming back and listening to it over and over and over. Not sure why you would do that. I take that back. Lots of people do that. I do that with a lot of podcasts, especially one of my favorite podcasts, Successful Business Generations, Successful Generations. That's what it's called, Successful Generations, one of my favorite podcasts. But I thought we would just kind of get started here. Make sure that you follow me on Instagram at Age of Jeremy, on TikTok at Age of Jeremy, on Twitter at Age of Jeremy Q, on LinkedIn at Jeremy Quintanilla. Make sure you join our Addicted to Facebook group on Facebook. And go ahead and follow Age of Radio Age of Radio Verse on Instagram. And then also, as always, give a shout out to my good friends Kevin Anytime and Coach JV. Follow them on TikTok, Coach JV. It's Coach JV_. Kevin Anytime is Kevin Anytime. And they're just destroying the health and wellness scene right now. I'm the finance guy, which is kind of what I wanted to get into today is finance. Actually, that's not really all that I was going to get into today. I kind of want to go over a couple of things, and we'll talk about this a little later in the episode, a little bit more about what happened with Robinhood. But there was a lot of interesting stuff that happened in the news that I just want to bring to your attention. There are a lot of people out there that don't believe in reading the news or watching the news. I think that watching the news and being a part of the news is great. I think if those things kind of cause you anxiety or fear, maybe you should back away from them. My mother watches the evening news and it's always talking about the coronavirus, and it always causes her some type of anxiety. So I think that with someone like her, I don't think that she needs to be watching that. I think she might be better to read some good old fashioned newspaper like the New York Times, maybe the Arizona Republic, definitely the Washington Post, one of the best newspapers. New York Times is a great newspaper too. Wall Street Journal is my favorite newspaper. Financial Times, one of my favorite newspapers, The Economist, and obviously where we get a lot of our news is Market Watch. But I think if you want to really dive deep into journalism without reading long form journalism, one of the best places to do it is by getting a newspaper, sitting down and reading it. But I think that you should be up to date on what's going on in the news. And one of the biggest things, there's lots of big things that have been going on in the news, but I'm just going to say real quick, I think that AMC stock. I'll probably go into this a little bit later, but I thought I'd start with this AMC stock and this GME stock because AMC stock is down to $7.82. And just to kind of prove my point about what drives the stock point up, I decided to waste some money. So I took $400, just threw it at AMC. It was just fun money that I had. And so I threw $400 at AMC just to see what would happen. I have to hold my position for 30 days and I have to get approval to sell it from my main job employer. So I couldn't just buy and sell it through a short. I have to, I guess through a short period, I have to hold it for a longer period. So if we look at AMC Entertainment holding at $7.82, it's down 41.29%. I bought it at $15.02. And I figured that was going to happen. Not a big deal. That's I just wanted to show how speculative investing and how volatility works with speculative investing. You have to be on the beginning part of it. And one of the best ways to be on the beginning part of it is to make sure that you have all the information and to get as much information as you can as possible. Or in the case, there was the possibility that I could have made most of that money back if I had the ability to sell it. So if I turned around and sold it, I think it got up to almost $17 that same day. I could have sold it that same day and made that $2 profit. But again, not a big deal. It's $400. But GME, so AMC is down 51% today. Let's see where GME ended. GME is GameStop. It's down to 90. It had a 60% decrease. And so I'm going to go into this a little bit later when I talk about Robinhood and their solvency problems. And kind of, I take that back. It wasn't a big shock to me, but I think that was a big shock to a lot of people that a fintech company had solvency problems. I don't know any fintech company. Well, there are some now because some of them are getting so big, but I don't know any real fintech company that doesn't have solvency problems. In fact, if we even look at Tesla, Elon Musk, who's missing, not really missing, Elon Musk even has solvency problems with Tesla multiple times. He even made a tweet this year that they're going to need to come up with some more cash at some point because they're not going to have to make enough cash to meet the requirements for all the cars that they need to build. So I think it's ridiculous. I think it's ridiculous to trade on Robinhood, but I'll explain that a little bit later. So I guess since I brought up the missing Elon Musk decided to go off of Twitter today. I think that's good because he can maybe spend less time tweeting. Love Elon Musk, but maybe he could spend less time tweeting and focus on less rockets blowing up. So today, Elon Musk's company, SpaceX, launched its latest Starship prototype from the southeastern tip of Texas, 2 months after the previous test ended, and in an equally explosive belly flop. And the response from the individual that's in charge of the launch, I think it was, Scott Budman, SpaceX test ends an explosion. Oh, no, not Scott Budman. My apologies. Scott Budman posted a tweet saying that SpaceX test ends an explosion on landing pad. The full-scale stainless steel rocket reached its intended altitude of 6.2 miles, slightly lower than the last one. Everything seemed to be going well as the 160-foot Starship flipped on its side and began its descent, but it did not manage to strain itself back up in time for a landing and slammed into the ground. SpaceX tried to launch another Starship last week, but failed to get the necessary approval from the Federal Aviation Administration, prompting a Twitter outburst from Musk. Musk obviously goes through a lot of stuff because he runs two companies. Jack Dorsey also runs two companies, and he is not as vocal as Musk is. Either way, if you're running two companies at that level, that has to be a lot of stress on you. I think what Musk is doing, I think SpaceX is where he should spend his time. I personally think that he should get rid of Tesla and get it over. I think Tesla should be sold to Apple. And I think Elon should just focus on becoming a multi-planetary species, because that's where I think that we should be focusing a lot of our energy and resources on. So I think that it's good that Musk kind of cuts back on the tweeting and just really focuses on the company. He's not saying that he can't do both. I just think that when you run that public company and you going out there and and saying stuff out there, and it can have a detrimental effect on the public side of the company, on the publicly traded company. So I think that that's just a smart business move on Musk's end, for where he's at. Just like I would hate to see, the CEO of the bank that I work for constantly tweeting all the time. I would want to be focused on business. Again, not saying that Elon Musk can't do both, and not saying that I don't like Elon. I highly respect Elon Musk, and I think that he is going to be doing even more great things in the future. Now, onto a man that's decided to step down from what he's doing. Jeff Bezos, the CEO and founder of the amazing Amazon, is taking a back seat by becoming the executive chairman of Amazon and handing the reins over to the gentleman involved with his AWS business. If you don't know what AWS business is, that is Amazon Web Services, and they focus on their cloud computing and cloud storage business, which is what kind of turned Amazon around. Prior to that, Amazon was just like a fancy Walmart, I guess you could say, and Bezos and his investment into Amazon Web Services helped turn that around. The career of Jeff Bezos, the CEO of Amazon.com, has been nothing short of amazing. There is a fantastic chart here on Market Watch. If you head on over to it, it shows Amazon's total return as opposed to the S&P 500 total return since 1997, and it makes the S&P 500 just look like a flat line. I mean, it destroyed it. These are the kinds of companies that you want to be involved with, but at the time, you really don't know if that's what the company's going to do, and it went like, I don't know, 1497 to 2014 without really doing anything, and then just boom, became just ginormous. And one of the things that Bezos always claims that he does is they're always 10, 20 years out. There was I don't know if it was a CEO in Japan. No, yeah, the CEO, the founder of CEO, or the founder of Sony, or the CEO of Sony said that they plan out 200 years. There's nothing more impactful than planning. I just want to say that. People always make fun of me because of how planned. I'm probably a little bit more structured than I need to be. In fact, I guess I shouldn't say this, but technically, if you wanted to find out where I was at, you would just have to watch me for a week. And I do literally the same thing because I'm so structured. Jeff Bezos is stepping down. I'm trying to find out here who is taking over. I know who's taking over. It's the head of the AWS services, but for some reason that person's not important enough to put their name in here, or for them to put the name of that gentleman in here, but it's the head of the AWS division. So you can look it up if you want. Not really that important, other than I don't know what this means for Amazon. I mean, if Bezos had been planning this because he's such a good planner, and they're bringing this person on and that person knows what's happening, then I definitely think that Amazon could still continue the way Tim Cook just continued to grow Apple. So again, Amazon, not a company that I'm a big fan of, trying to move away from using their products just because of their business practices, but that doesn't mean that you have to stop using them. Use them. It's super convenient. So the other thing too is Alphabet post record profits for second straight quarter despite the pandemic, which not 100% sure how the pandemic would have affected that since it's a virtual company. But anyways, revenue after removing traffic acquisition costs improved to $46.43 billion. Google's parent Alphabet Inc. posted record profits for a second straight quarter during the pandemic, sending shares surging 8% to a 52-week high in after-hours trading today, Tuesday, February 2nd. The search engine behemoth, Google, Google, reported a net income of $15.23 billion or $22.30 a share, compared with a net income of $10.67 billion or $15.35 a share compared to the year ago this quarter. So Google just destroyed not being destroyed, they destroyed due to the pandemic and all the regulatory stuff. I'm a big fan of Google. I think it is difficult because they have been known to, not been known to, but have been accused of having shady practices with their ad sales, and how that the algorithm works and what they show you and stuff. But I mean, from the development side and what they've been able to do with the Android operating system and their Android development, especially since I'm spending a lot of time doing that Android development now, I'm trying to build the Age of Radio podcast, or Age of Radio podcatcher app. So, I mean, I am spending more time with Google products, and so it continues to be a great company. And through master's school, when I was going to Northeastern University and getting my MBA, we all I had was a Chromebook. I did all of my master's stuff on a Chromebook because I'm super, super cheap and my computer was crappy and I didn't want to spend the money on it. So I used Word or Google Docs, Google Sheets, Google PowerPoint to put myself all the way through doing my master's program at Northeastern. And so obviously they have great products. And this was a couple years ago. I think I graduated from that in 2015. Yeah, 2015. So I'm a big fan of Google, so good for them getting record profits. And let's see. The last thing, too, I just want to mention this because I think it's great. Twitter has permanently banned the corporate MyPillow account after founder Mike Lindell posted from it. So I guess Mike Lindell got shut off from Twitter, but Lindell tried getting around his personal Twitter ban by using his company's account to call out Jack Dorsey. Jack Dorsey is the founder of Twitter. And then it looks like that Twitter decided that he was breaking their policies, so he put them down. But it says we're extremely busy and hiring as fast as we can to handle all the shipping. The post continued, Jack will be found out and should be put in prison when all is revealed. A Twitter representative confirmed to Market Watch that the corporate MyPillow account was permanently suspended for violating our ban evasion policy. Twitter has banned more than 70,000 accounts for sharing misinformation since the riot at the U.S. Capitol last month. And the MyPillow guy was doing some of that. And the Goya guy, the guy that owns Goya, I guess was doing that too. And he, I guess, alluded to the false voting or the voting fraud. And so his board for Goya, the Goya board of directors, said that the CEO is not allowed to do any more interviews without board approval. So if you ever are curious if the CEO is really in charge, they're really not. It's the board of directors. And they are the ones that are actually the capitalists. And we're talking about capitalism and how the ownership works, the board, and then the shareholders, obviously. And so I think that I guess I'm a little biased because I support Jack Dorsey. And in fact, there's a lot of stuff that Twitter does that I'm a fan of. I didn't realize how much of Twitter I enjoy until I started doing Twitter a lot more. And I think that it's a fantastic product. I'm a big fan of Square. We don't personally use Square. I use Ingencio and Elevon, I think, for one of my other businesses for their merchant. And then we use another merchant company. We use QuickBooks Merchant for Age of Radio. And we use another merchant company for my health company that I'm trying to get off the ground. And so to that point, I think Square is a fantastic product. I think Jack did a great job with Square, and Jack did a great job with Twitter. Again, I'm biased, but I can definitely see how if it's not your opinion and what you believe and those thoughts and those and the stuff that's being said for the things that you believe are being shut down, I can see how that could look like some type of oppression. But this has to do with policy. And if you're not following Twitter policy, they're the company that you agree to follow their policy. It's very similar to when hosts come and are a part of a radio, they agree to follow policy. Now, the difference is us being a smaller company than Twitter. I don't have a problem with people reaching out to me and saying, hey, Jeremy, this is my thought on this. And I will definitely work with people. But again, I'm a big fan of Twitter shutting down fascists. If you agree with the fascists, then I can see how you would be pissed off. So I guess that's really everything that kind of happened so far. GME crashed, AMC crashed, Alphabet's doing good. Twitter suspended Lindell, and Jeff Bezos is stepping down, and Elon Musk is missing from Twitter. We'll be right back.
Get out of the trenches of tedious tasks like managing order fulfillment and start growing your business with ShipStation. They'll help increase profitability by automating your workflow with their simple, easy-to-use dashboard. With it, you can pretty much do everything you need to quickly and easily. Update order information, print labels, compare rates, optimize shipments, and even set up automatic delivery notifications. And it doesn't matter where you sell. Amazon, Etsy, eBay, Shopify, ShipStation can integrate pretty much anywhere online. Another great thing about ShipStation? They can help reduce costs with industry-leading discounted rates from some of the biggest mail carriers. You might even be able to get up to 89% off USPS and UPS rates. So, make this year your most profitable one yet. Sign up for your free 30-day trial at ShipStation.com and use the code Spotify. That's ShipStation.com with the code Spotify.
Welcome back to the Age of Jeremy. Thank you so much for sticking around for the second half. If you're wondering why I'm out of breath, it's because usually when I start to do this podcast every Tuesday, I do it after I get off work at my main job. And I do this, and then I do, we have some people that purchase us for audio editing for their podcast, and I do that afterwards, and I kind of kick back, and I've been spending a lot of time doing a job program. But during this time, Kylo, my dog, my Maltipoo, my pride and joy, my little baby, he's 4. He likes to go outside and bark at the neighbor dog, and then that dog starts barking, and then my neighbor starts yelling at his dog, and I feel bad, and then the other people that live behind me, their dog starts barking, and then like the dog out front starts barking. So I just spent like the last 5 minutes trying to chase my dog, Kylo, around the backyard, trying to get him and bring him inside. And I don't know what's happened, because when he was a young puppy, he was so good that just over time, he just continues to be like, I'm getting older, I don't have to freaking listen to you. And that is a pain in the butt. But I wanted to dive a little bit deeper for maybe the next 10, 15 minutes, maybe 20 minutes, who knows, into this Robinhood thing. So Robinhood, essentially, the idea was that Robinhood stopped selling GME stock and AMC stock because people made what was happening on social media is people were saying that Citadel Capital were one of the investors in Robinhood. And Citadel Capital also had a hedge fund that was losing billions of dollars due to this short. So Citadel made Robinhood stop the sell of GME, GameStop, and AMC, so the stock price would fall down so that the people had the short positions could make their money back. And that's not really what happened. What really happened, and this is surprising, is Robinhood doesn't have any cash. And so that's something that we call being solvent. And so without going into too many details, we'll just, for the purposes of this, it means that you don't have enough cash to continue operations. And they didn't have enough cash to handle the workload that was being placed onto them due to the purchasing of the GameStop. And so that's a big problem for a company that needs to have cash. And so that it kind of opens up a few very interesting questions about what we're allowing to happen and how billionaires are being made. So billionaires traditionally are made because of investments in their companies, and all of this cash flows in, and because they own the largest portion of that, they are called billionaires. That doesn't mean they have $1 billion in cash. It could mean that they get paid maybe $1 million a year or whatever, but their net worth is $1 billion. And over time, if they take dividends or they get bonuses, I think if Musk makes all of his requirements to hit bonus, I think his bonus is close to $1 billion. It's like $794 million. And so, yes, you can become very, very wealthy that way. But the founder of Robinhood, he is a billionaire because, he owns the majority portion of it. He probably gets good bonuses, and he has the most ownership in the company. And so he's a billionaire. So they always are continuously needing to have cash. So they don't try to balance their balance sheet. They don't try to get their expenses under control. They just figure that because they're the next big thing, that all of this cash will continue to keep throwing at them. So they never turn things around and become profitable. And so a lot of these companies are called unicorns, where the goal is that it just becomes big enough, like say Facebook, that you invest when it's low, it becomes a unicorn, it just blows up, it goes public, you make make billions of dollars. There's this new model coming out called being a zebra, and that zebra is maybe we're not going to be a $1 billion company, but we're going to be a $10 million company that has really good profit. And one of the things that people need to think about, capitalism aside, is that profit is super important to a business. Now, what you do with that profit kind of determines what your, whether or not you're socially responsible or ethically responsible. But for the most part, you should be trying to minimize those expenses, increase those revenues, and get as much profit as you can out of that company to do cool shit with. Because the more profit that you have, the more money that you have that you can reinvest back into the company, the more money that you can pay out to employees for bonuses, the more you can give distributions to the owners. And that should be the goal. And so there's a fantastic a podcast that I don't have a clip of called Command Line Heroes. And there is a Black gay woman who has a angel investment company that focuses on angel investing for people of color, people that are homosexuals, that are part of the LGBTQ community. And I don't remember her name off the top of my head, but she likes looking for these zebra businesses because they don't want to be billionaires. They want to run a really good company, and that's important to them. And for you being a business owner, that needs to be important to you. But back to Robinhood. Robinhood just doesn't give a shit because they just know that they created something really interesting. They focus on enticing people to continue to buy stock because that's how they make a good amount of their money. So if we look at Robinhood, and I think the main founder, and as you all know, I'm terrible with names, but Vladimir Tanev, he's the founder of Robinhood, or one of the founders of Robinhood. And if Vladimir is running the company, he's getting a lot of the money, and it turns out that I guess I shouldn't say he's getting a lot of the money, but I'm saying that he became a billionaire because of Robinhood. And Robinhood turns out to not have any cash, which it poses an interesting thing because Robinhood makes its money by getting kickbacks, or what they call rebates, for getting trades from people and then getting those trades executed. So they'll get someone like me, or not me specifically because I don't use Robinhood, but we'll say someone like me because I'm a millennial. So they'll get a millennial to go on there and they'll entice them to get this stock, or to buy this stock, or this is the best thing, or share this stock and get another free stock, or whatever. And then once that happens and they get more stock and they buy more stock, then Robinhood is a midway point, but as a broker, to find someone to execute that trade. So then they find the company to execute that trade, and that trade, they give them a kickback for them using them for that trade. And so the less money that Robinhood has, the more they need to get you to invest. And that's why Robinhood's designed to entice people to continue to invest and invest and invest and invest. And now we have all of these people, and some of them could be really good, some of them could be really bad, getting into investing and then giving advice on investing, when technically maybe they should be doing better research, and the company should be held accountable for the information that they're giving to people to invest. The other problem is they also make a lot of their money off of margin, and margins when you borrow money to invest and that's mainly designed for speculative investing, because why would you borrow money to buy a stock if you're going to hold that stock forever? I mean, I guess you could if you can't afford it or you want a lot of it, but a lot of it has to do with speculative investing. Can you get rich off of speculative investing? Absolutely. Is speculative investing fun? Absolutely. But when you have a group of people that when you have a lot of people that don't know anything about investing, and then you have all these people coming in and saying, we can get all this money if we invest in this stock and it's going to go up, then you put all your money in that stock and maybe it wasn't the right thing. So if you were going to invest, I would say a couple of things. One, get a traditional brokerage account. TD Ameritrade is the one. So I have my Roth IRA with my Wells Fargo brokerage account, and then we are working on getting a family investment operating agreement together, and then we're going to open up a TD Ameritrade account under that family investment LLC. And with the reason why I want to do TD Ameritrade is because I think that I want to try out Thinkorswim, which is their brokerage platform or their software platform. And I think that that's where I want to go that route. So there's also other ones, Charles Schwab. Not saying that any of these would have stopped the selling of the GME or AMC stock, but I'm just saying that they're more reputable brokerage houses than, say, Robinhood. And again, if you want to still go with Robinhood, absolutely go there. There's also Webull. Webull is one that my brother-in-law uses, I believe it is, and he does a great job with it. But I use Wells Fargo. Wells Fargo doesn't have as many tools as some of the other brokerage accounts, but so I also am getting on the TD Ameritrade. I used E-Trade in the past. That's a great platform as well. And so I think that you should do more research on other and larger brokerage houses, but we don't see advertisements for those because that's not the companies that's providing that's main source of income. And so you might be asking, well, how do they make their money? Well, as we stopped doing commission, we started doing more free trades across most brokerage platforms. And the reason why that happened is because companies like Robinhood came along and were taking all of that business because they don't offer any trades. And so, or they don't offer any, they don't charge a fee for their trades. And so a lot of companies, like at one point, Wells Fargo, brokerage did, I think it was $9.99 a trade, and then it went to $5.99 a trade. And then Wells Fargo just stopped trading. And same thing with TD Ameritrade and E-Trade and Charles Schwab. And that's because what they decided to do was it made more sense for them because you'll traditionally hold a cash position in your brokerage account. They'll loan out that cash similar to the deposit accounts that you hold at the bank. And so they can get the return on that a lot better, and it gives them that cash to lend out than, say, charging people for the fee for the trade. So it was just a logical place for us to move to as technology came along. And again, I don't want to be terribly towards Robinhood. I made a TikTok today that was kind of like F Robinhood because my goal isn't to just downgrade and talk crap about other companies. I think the app itself, I think I was given a free Zynga stock when a couple years ago in Robinhood. And so the app itself is really cool. I think that that's great. And we're moving technology forward, and we need to be trying to innovate in this space. But Robinhood really messed up in this regard. And I mean, it's just now showing where they're at. So I don't know how Robinhood's going to rebuild itself, because I would imagine at some point they would want to take Robinhood public. I don't know that for sure, but I would imagine so. So a lot of the original investors can make a crap load of their money back. But at the same time, I don't necessarily support it. I, again, would support a different brokerage firm, like I said, TD Ameritrade, over any of the other ones personally, or maybe E-Trade. Again, I've used these ones. I haven't used some of the other ones. Oh, I've also used Edward Jones doesn't have from when I used Edward Jones, I just had an advisor that had some stuff for me. So I don't know if Edward Jones has a brokerage app now, but there's lots of other stuff that's out there for you to use. Which brings me to the point that you should be investing. So what I would recommend, whether you're a consumer or a business owner, is to have two types of brokerages or accounts, right? You have your solid money, okay, that has a plan in place, that you're sticking to that plan. And I'll say this, the biggest reason why people don't have enough money for retirement is because they don't have a plan. And if they do have so they don't know what they want to do after they retire. That's the first thing. Second thing, they don't know how they're going to make money after they retire. Okay. The third thing is they don't have a plan to get to retirement. And then the fourth thing that comes along is that a lot of the times when they do have a plan and they're moving along towards their retirement, they don't stay on that plan, so they fall off. So it's a good idea to have a financial advisor that you stick with, that you stay on the plan and you just follow that plan. That's the reason why it's a plan. We have strategies that are in place to get people as financial advisors to retirement, to the mark that they need to make. They have programs that can tell you what you need to make, how long that money will last for you into retirement. And you need, definitely as a business owner, and also as a consumer or an employee, you need to have that part of your plan. So I would recommend reaching out and finding a financial advisor. Financial advisors get different fees for different things. Some of them will charge a fee just for giving advice. A lot of them will take a percentage off of the amount that they grow your portfolio. Some of them will charge a monthly fee no matter what, up to a certain, dollar amount that you have in assets with them. There's lots of different ways that they can charge you to pay, but I would really, or different ways that they charge you, but I would definitely look at finding a financial advisor, building a relationship with that person, and moving forward with that person, no matter what your status of wealth is. Okay. And even if you can put $25 a month into some type of an account, whether it's an individual retirement account that you have a mutual fund in or an index fund in, that will start setting you up for retirement. And that financial advisor can help you along the way, but then also make sure that financial advisor understands taxes, and then also make sure that financial advisor understands just budgeting and regular personal finance stuff. So I would really recommend that, whether you're, like I said, a business owner or a consumer or an employee for a business owner. Okay. Now, in that, you just stick to that plan. That gets you to where you need to be. Then you either use that same financial advisor, or you just get your own brokerage account and you just start trading however you want to trade, learn about charting, learn about technical analysis. There's a great magazine that I enjoy reading. It's called Commodities and Stocks, Technical Analysis of Commodities and Stocks. They have lots great charting They teach you about Japanese candlesticks, which is a charting methodology. And you can learn about that and then put, say, $1,000 that you're comfortable. That's a lot. Well, I guess some people would have $1,000 to put in that a month, but you could put like $400 into that, a quarter, or $100 a month, $50 a month, and just buy the stuff that's interesting to you, just to see if you can be speculative and make money. What you don't want to use is use that retirement money to do that speculative investment, because speculative investing, there's a larger chance that you're going to lose money, and there's a larger chance that if you made money, it's just by luck, not because you know anything inherently different than anybody else, because in theory, all of the information is available to the market, so you can't technically beat the market, even though people think that they can't. Again, that's just my personal experience. And there are times where I'm like, oh my gosh, I beat the market because I had such an amazing year or whatever. It's just, in my opinion, it's just luck. But if you feel that way and you want to do that route, by all means, go and do that route, because you should be making money for yourself. So I really encourage you to reach out to a financial advisor. As far as financial advisors go, we are not sponsored by any of the companies that I mentioned. We're not sponsored by Wells Fargo. We're not sponsored by TD Ameritrade. We're not sponsored by Charles Schwab. We're not anti-sponsored by Robinhood or sponsored by Robinhood. These are just my opinions and solely my opinions, not the opinions of Age of Radio. If you go and do a financial advisor, Edward Jones is a really good company. Charles Schwab is a really good company. Most of them own their own financial office. They're like franchisees almost. So there could be people just like you that started a small business, and that way that they started that small business was by becoming a financial advisor and buying into their own Charles Schwab building or their own Edward Jones building. And then, or you can go to your local bank. Bank of America has financial advisors. Wells Fargo has financial advisors. Some of the things that you might run into, some places require you to have a decent amount of money if you're going to invest with them. Some of them may require you to have a monthly amount that you invest with them, and then also make sure that they're upfront with any type of fees that could be in the agreement that you sign with them when you bring them your money to invest. So just always be on the lookout for shysters, and be on the lookout that all corporations don't have your best interest at heart. For the most part, they have their own best interest at heart. So they are going to be paid. Just you have to be okay with how much and for what they're being paid for. So the other thing that I wanted to mention, now that we talked about that, is that a lot of people don't understand how the short works, and the short is used in hedge funds or in hedging strategies to reduce the amount. Traditionally, it's to reduce the amount that you would otherwise lose if you were to sell the short not, but options are, or derivatives are. It reduces the amount that you would otherwise lose or gain if you bought or sold a stock. And so with these short positions, the reason why GME went up so high is because so many people had so many short positions out. As people started buying into the market, the price of GME started to go up, and these people started buying up GME to cover the short positions, because a short position means traditionally that you borrowed the stock for maybe a fee, you sold that stock for a higher price with the intent to buy the stock back at a lower price when it falls to give back to the person that you borrowed the stocks from. And then the difference in that buying and selling was the money that you made. So when you get into different strategies like that, they are fun. Hedging's fun, options are fun, but I am also a huge fan, as if you are not a finance connoisseur or investment connoisseur, just stick to buying index funds, mutual funds, and companies that you believe in, that you want to own, and hold them with no intent to sell them ever. And those will be good investments for you. I hope you guys have a great day. We'll talk to you next week. Bye. Thank you for listening to The Age of Jeremy. Make sure to subscribe on your favorite podcatcher. If you can do me a favor, please rate this podcast if your podcatcher allows you to. Talk to you soon.
Okay, everybody, it's Michael E. Cullen II.
And I'm Sesame and Carta from the All Too Real 2 podcast. We're passionate about movies, TV, and pretty much all things pop culture.
Dive into the chaos of failed sitcoms, direct-to-video sequels, and the quirky realms of cinema and TV.
Join us every Thursday for your dose of All Too Real 2 entertainment.
We'll guide you through debates like whether Howard the Duck qualifies as a superhero.
Ponder if Larry the Cable Guy could be the new Rock or Schwarzenegger.
Discover if some shows and movies should have stayed in the cutting room.
Ever heard of a sitcom featuring that dictator with the funny mustache? Well, we watched it.
We're dedicated to unraveling the peculiarities of pop culture, sometimes with awesome guests.
So, if you're into the eccentric world of pop culture,
listen and subscribe to All Too Real 2.
Available wherever you find podcasts
and on Age of Radio.